This is the step-by-step process I use to invest in the stock market in under 5 minutes a day. It's the same system that got me to my retirement number by 28, and the same system I've now taught to thousands of people inside the Trade Tribe. How I pick stocks, buy them, and manage them. Everything from start to finish. Let's get into it. So how to pick your first stock. Now the key to picking any investment is to have a really strict criteria of what you would invest in and what you wouldn't. Now in the VAC strategy, I have something called the Fundamental 13, which is something I've created. However, I'm going to take you through 4 criteria that you can use right now to look for your investments. So let's take a look. So to look for stocks, I come onto this website, finviz.com. Really great tool for looking for investment opportunities. It's almost like the Rightmove of the stocks world. If you're looking for a house, you'd go on Rightmove. If you're looking for a stock, you come onto Finviz. So as you can see here, there are a huge number of criteria that you could use to find a stock. So I'm going to take you through a few ones that I think are important. One over here, we've got market cap. Now this just means the value of the company. As I said earlier, we want to be investing in the biggest companies in the world. Another criteria we might look at is the current price of the stock a good price? Well, some people use things like the PE ratio. I actually use something called the PEG ratio, PEG, price to earnings to growth. The next criteria is based on who do you think has the most access to information about stocks? Is it us, the everyday person? Of course not, right? It's the big guys, the banks, the hedge funds, the institutions as they're called. So there's this criteria on here called institutional ownership, which will show you how much of this company is owned by the big guys. And then a fourth thing I would check is the industry you're investing in. So I only have 5 stocks at a time. I want to make sure that those stocks are in 5 different industries. There's no point having 5 gold mining companies. Way too leveraged in one specific industry there. I want to have 5 different industries. So I'd check that too. Okay, so let's take a look at 2 companies and see how they compare. First one I'm going to go for is Google. Going to take a look at that. Let's get that open in one tab. And then I'm also going to have a look at a company called Bob's Discount Furniture. Let's use this. So on Finviz, you can have side by side the 2 companies' stats, their fundamentals. Oh, we're going to start off with Google. Now, if I'm looking at Google, I just said about market cap, which is the value of the company. So if we see here, the market cap for Google is currently 4,689 billion, or 4.6 trillion, in other words. That's quite cool. So if we have a look at Bob's market cap, it's only 1.33 billion, so much smaller. So you might say that Google looks a little bit better there, as it's a huge, huge company. The next thing we were looking for is the PEG ratio, which we mentioned. Now, Bob's has got 2.39. Now, this one's interesting because the lower the better on this. If that one's 2.39 and Google's is 1.65, so it means Google is a better price currently than Bob. So that's looking good as well. So I'd say Google wins that one. And then the third thing we said we'd look at is how much of the company the institutions own. Now this is quite an interesting one because there isn't necessarily the more the better or the less the better. You probably just don't want one at either end of the spectrum, because obviously if the institutions don't own a lot, bit of a red flag, why don't they want to own it? But if they own too much, you're at a disadvantage as an investor. So either way, not that great. So we want somewhere kind of in the middle, bit neutral. Google, we've got 38% here, fine. Bob's is, wow, 0.09%. So the institutions really don't favor this one. That might be a red flag too. Now it is a very new company, you can see here as well. It only came out in February 2026. So that would add even another layer of risk to it, in my opinion. So for me, looking at the industries as well, so obviously we all know what Google does. Bob's Discount Furniture, unsurprisingly, is in the furniture industry. I think there's a clear winner here and Google wins by a mile. Now when I first started my investing, I didn't have anything like this. I was just basing all of my decisions off of gut feeling, or if I'd heard of the business. That was like my criteria there. So way riskier. And having this criteria now, a very strict system that says yes or no, has made my life so much simpler. Quick thing before we move on. These 4 checks are part of a bigger system I use every single day. The full version only takes about 5 minutes to run, and it's the same system that I've used to hit my own retirement number by 28. If you want me to walk you through the complete system live, I run a free masterclass at thetradetribe.com, link in the description. Now what's interesting about my fundamental 13 criteria is when I plug that in each week to see what opportunities meet what I'm looking for, some of the biggest names in the world aren't there. Some companies you might think, oh, I'm sure they're a great company. Hey, look, they might be good, but they're not exactly what I'm looking for, so I just don't spend any time looking at them. That's how strict I am with this. Look, I've been investing in stocks for over a decade. I've got 1,000 members in my community that I teach this strategy to. All of us, including myself, use this filter every single day. So once you've found a stock to invest in, then you need to decide when to invest and how much to invest. So this is a really key part of the strategy, because a mistake a lot of people make when they start investing is they see a company they want to invest in, they know how much money they have, and they throw it all in one go. This is a massive error, because if you put all your money in one go, you are banking on the fact that you think it's going to go up. Well, at least 50% of the time, you're going to be wrong, right? A stock can go up or down. If all of your eggs are in one basket, you're going to be losing a lot. So instead, what I do is I break my investment down into smaller chunks. I essentially budget it out and say, okay, well, if the stock is at this price, I'm going to invest a chunk. If it were to fall further, I'm going to invest some more. If it's going to fall further, I'm going to invest some more. So as the stock gets cheaper, I buy more of it to get a better deal. Like, I use this religiously now, but this probably matters even more when you're first starting out, because let's imagine you did just throw all your money in one go. Well, at least 50% of the time you're going to be wrong, and that's going to really damage your confidence when you think, oh, I'm just losing here, like what's the point? And it's going to set you back. So instead, having these predetermined levels where you would buy if it gets there, and budgeting your money out across that, absolute game changer. I'll now show you how to actually go and buy these stocks. And I use a platform for this called Trading 212. So let me show you how. So this is Trading 212. There's loads of platforms that are great out there. This is the one I personally like to use. So really simply, in the top right corner up here, you've got a search bar. From there, you can search for any company that you would want to invest in. So let's say we picked Google. There it is, we've got Google here. Now, obviously, if we're trying to buy, you want to click the blue buy button. You click that, and then it gives you this little order form. I always select, when I'm buying, the limit order. Okay, it just means when the price gets to this, buy the shares for me automatically. That's essentially what you're asking there. So let's say I wanted to buy 2 shares of Google when the price drops to $350. Great. Well, I just put in how many shares I want and at what price, click the blue button, gives you a quick summary, and then click send buy order. And that's it. That order's placed now. As and when Google hits that price, it's going to automatically buy those shares for me. If you're busy or you're at work or on holiday, doesn't matter. It'll just automatically do that for you. So this is a really good way to set things up front and then just be super hands-off. So now that first order is set, as I said, if it drops further, I'm actually going to buy some more. So you can go ahead and just set as many orders as you like on that. So again, set it all up front and then you sit back and let it happen. But once those orders are set, I'm not going to be staring at my screen all day, every day, waiting for them to hit that, because it's automated now. So in reality, all I'm going to do is just once a day, I'm going to open up Trading 212, have a look, has it hit my order yet? Yes or no? And that's it. And ironically, if you were to try and spend more time on investing than just the 5 minutes a day, you're probably going to do worse, because by staring at something more, you're going to get more emotionally invested into it, you're going to get more impatient, and you're going to make some emotional decisions. And emotions and logic do not mix when it comes to investing. So you're actually better to set your orders and then just sit back. Then you can't make an emotional decision and you can't make a mistake. Now, out the other side of this, we're not just buying. Eventually, we want to sell too, right? We want to take our profits. So before I even get into these investments, before I'd set those orders, I already know where I would want to sell the stock. So I know what percentage profit I would want to get to. So again, as soon as it hits that percentage profit, I know what to do, click sell, and I'm done. I'm not just going to sit there staring at it all day. You can actually set alerts on Trading 212 to tell you when that's happened. And that's how simple it can be. Have a filter for selecting the stocks you want to invest in. Decide that you're going to phase into a position and split your investment across a few different increments, and then know where you're going to sell. So then when it happens, you can do that effortlessly. That's how simple investing can be when you have a proper strategy to follow. As I said, I did this for years without that, so I know what the downside of not having it actually is. And my life is so much easier, and my investments are so much more successful now that I have this structure. And to let you in on a little secret, very few people have anything like this. So you just following these 3 steps will set you ahead of most people. This is the core process from start to finish. If you're serious about taking this further, I run a free masterclass where I go deeper into everything I just covered. The exact thresholds for the filter, the full entry and exit rules, and I walk you through the full system live so you can see it in action. It's free, it's about an hour, and the link is in the description of the video or at thetradetribe.com. I'll see you in the next one.